Welcome back to StockAnalytics.ai, the podcast that breaks down complex earnings reports into actionable insights. I'm your host, Anthony.
And I'm Cleo, your lead analyst. Chewy's Q1 2025 earnings are just out, and this is what you need to know.
Today, we're diving deep into Chewy's Q1 2025 earnings, dissecting the numbers to understand what it means for investors. The pet industry is always interesting to watch, especially in the current economic climate.
Absolutely. Chewy reported revenue of $3.116 billion, an 8.3% increase year over year. Earnings per share, that's EPS, essentially how much profit the company made for each outstanding share, came in at $0.15, which represents no growth compared to the same quarter last year.
So, revenue growth is decent, but flat EPS. Was this a strong, weak, or mixed quarter overall, Cleo?
It's a bit of a mixed bag, Anthony. The top-line growth is encouraging, but the stagnant EPS raises some questions. Looking at the bottom line, net income reached $62.4 million, translating to a net margin of 2%, which is down 30 basis points year over year. That means Chewy kept 2 cents of profit from every dollar of sales. While positive, the declining margin deserves further investigation. The CEO, Sumit Singh, highlighted the resiliency of the pet category and Chewy's compelling profitability and free cash flow generation. But we need to dig deeper into the numbers to see if that optimism is fully justified.
Good point. Let's do that.
Now, let's talk about profitability. How efficiently is Chewy converting sales into actual profit?
Operating margin came in at 2.5%. So for every dollar of revenue, they kept 2.5 cents as operating profit before interest and taxes. This is a critical metric for retail investors, showing how well management is controlling costs. As we mentioned earlier, the net margin, the take-home pay, was 2%. Chewy's gross margin, which represents the profit after deducting the direct costs associated with producing and selling their goods, isn't provided in this release. However, we know it decreased by 10 basis points year over year to 29.6%, according to the highlights. This suggests potential pressure on pricing or increased costs of goods sold, something we'll need to explore further when the full financials are released.
Okay, so some margin compression there. What about cash flow?
Free cash flow, the cash available after essential investments, hit $48.7 million. This is vital for investors because it's money that can be returned to shareholders through dividends or buybacks or reinvested in the business. Operating cash flow, the cash generated from the core business operations, came in at $86.4 million. This is a healthy figure, which is a positive sign.
So, decent cash flow. What about their balance sheet strength?
Chewy holds $616.4 million in cash and equivalents. This provides a reasonable buffer for investments, debt repayment, or navigating economic uncertainty. Shareholder equity stands at $375.6 million, representing the residual interest in the assets of the entity after deducting all its liabilities. These figures offer a snapshot of Chewy's financial health, but a more comprehensive analysis will require a deeper dive into the full financial statements.
All right, so mixed results overall. What's Chewy's outlook for the rest of the year?
Management's commentary acknowledges substantial risks and uncertainties, which is standard for forward-looking statements. They emphasize their focus on continuing to gain market share and highlight the strong start to fiscal year 2025. The commentary doesn't provide specific quantitative guidance for revenue, EPS, or other metrics, but emphasizes their commitment to driving top-line growth, improving margins, and maintaining profitability. They also mention their share repurchase program, which can impact EPS and return value to shareholders. However, they caution that numerous factors could influence future results, including macroeconomic conditions, competition, and their ability to manage growth effectively.
So, a somewhat cautious outlook. What's your final takeaway for investors on Chewy, Cleo?
Chewy's Q1 2025 earnings present a mixed picture. While top-line growth remains positive, the flat EPS and margin compression warrant attention. The positive free cash flow and healthy cash position are encouraging signs, providing flexibility for future investments. The company's emphasis on market share gains and long-term growth strategies aligns with the potential growth drivers we see in the pet industry, such as increased pet ownership and premiumization of pet products. However, investors should be mindful of the industry-specific challenges, like macroeconomic headwinds and input cost inflation, which could pressure margins. Given the lack of specific guidance, investors will need to closely monitor Chewy's execution in the coming quarters to assess the sustainability of its growth and profitability.
So, Cleo, given everything we've discussed, what's your final takeaway for investors on Chewy?
Chewy is navigating a complex environment. While they are showing resilience in a challenging market, the pressure on margins and lack of clear guidance suggest a cautious approach. Investors should closely monitor execution and look for signs of margin improvement in the coming quarters.
That's all the time we have for today's earnings analysis. Thanks for joining us on Stock Analytics AI.
Remember, this discussion is for educational purposes only and not personalized investment advice. Be sure to do your own research and consult with a qualified financial advisor.
Subscribe to our channel for more institutional-grade earnings analysis. Until next time.